different mechanisms within the already templates that we have. US, but also looking at developing countries, and so has this experience from the high-income country perspective. We have Manuela Cleves from Fundacion or Corporacion Inversor, which is a Colombian impact investment fund, and Fundacion Corona, which is an investor, but also the manager of the Colombia Impact Bond Program, and so a middle-income country. And then we have Taddeo, Muriuki, and Celeste Brubaker from Village Enterprise, which is working on a model in Uganda, so a kind of a lower-income country. And it would be interesting to see how this structure applied to different contexts and how it's being impacted. So without further ado, I'd like to maybe direct my first question to the Colombian team, and maybe Laura, I forgot to mention you, Laura Casas from Fundacion Corona. Laura, the Colombia CIBS program, and that it's a program both of technical assistance and multiple impact bonds, it's on vulnerable youth employability, or kind of employability more general. It's a topic that essentially you guys are really much in the eye of the storm. The COVID is a health crisis, but it's also a major economic crisis. And when I was at, for instance, the bank working with you guys on designing these projects, definitely we were not contemplating anything remotely like this, or building in controls for these type of scenarios, which I imagine is impacting the projects themselves. At the same time, the massive spikes in unemployment probably make this topic highly relevant for your stakeholders in Colombia, in that Colombia and many countries are now going to be facing, unprecedented unemployment levels, and will need this type of flexibility and innovation. Would be really interested to hear, maybe to start, kind of give I think maybe useful for people to hear a little bit about the project, but also hear a little bit about where you're at with both the program and the impacts of COVID right now in Colombia. And I think maybe Laura, this could be a good moment for you.
Thank you, Zach. Good morning, good afternoon, and I think evening for some of you. Thank you for the invitation, Zach, and the opportunity to share our experience and how we're adapting and managing the crisis of COVID-19 from the Social Impact Bonds Program in Colombia, also known as CIBSCO. This program, for all of you who do not know, is led by the Inter-American Development Bank Innovation Lab, the Swiss State Secretariat for Economic Affairs, SECO, Prosperidad Social, which is a governmental entity, and Fundacion Corona, which is actually the executing agency of the program, as Zach mentioned. I just wanted to highlight what you were saying, Zach, and the goal of CIBSCO is to run multiple CIBs on employment and labor retention of vulnerable population, not only on youth, so that the model is built in Colombia. Feedback is fed into that model through different piloting processes, so which we have had the first CIB, now the second, which Manuela from Inversor will tell us a little bit more about it in a minute. And then we're with the outcomes fund that I'm gonna give you a little bit of detail in a minute. And so we're feeding these models through different piloting processes, and the market is also big in the country. So in the last 4 months, I think we've been adjusting quickly two of the main components. I just mentioned one, which is the second employment ZIP, which was launched in 2019 with IDB Lab and the municipality of Cali, which is a city here in Colombia's outcome funders, and Corporacion Inversor as the intermediary. Manuela just said is going to tell us a little bit more about the challenges and adaptation that have been through this intervention. And I wanted to stop and focus a little bit more in the employment challenge, which will be launched through the first outcome fund in Latin America. And this was established in December of last year. And the main goal is to replicate and scale up the CIBs in multiple sectors, not only in employment, but we're going to start with employment. And this challenge was originally set to start all this year and launch in October of this year, but COVID hit and we had to readjust super quickly. So what we're going to do is have a first challenge that is focused on really placement and retention of vulnerable population in the midst of a crisis. So we want to know, how service providers can react quickly and innovate in processes of employment, so people can get a job quickly, and all those who are losing their job can reinsert in the labor market quickly. So we're capitalizing in this first challenge and the learnings. It will start maybe in August of this year, and then we'll go to the second challenge, so we can also contribute to these second set of SIPs that can contribute to the crisis, but can also capitalize the learnings of the first challenge. So reacting super quickly, adjusting timing, and going through the metrics and all of that in this new labor market that we're all facing.
So you're actually, for you guys, it's not just about adapting to current projects. You're actually working with the government to use outcomes-based financing, essentially in immediate response to recovery. Is that, given that the situation in Colombia, is that really possible? What are some of the even design considerations around trying to launch an outcomes-based model within this context, given the tremendous amount of uncertainty? How
I think one of the things that we're really going through and thinking through deeply is the risk, because now the risk has increased tremendously, and we want to be thoughtful on putting all the risk on investors, and not necessarily only investors, but trying to balance that out and see how service providers not necessarily can get an important amount of risk, but how can we incentivize them to to participate in this model, and just strengthen those alliances to really get to obtain those results in such a times of uncertainty. And I was just saying, it's a labor market that is very new for everyone.
And are there any specific design considerations or mechanisms that you're exploring or building in that would be different from under a different scenario that you're kind of adapting into this, to using this model within a very, very, very different context? I'm really curious. So
I think one of the highlights is the first zip and the second zip, as Manuela is going to maybe mention it about in a minute. In terms of the intervention, we had a kind of a predetermined intervention, and you had to complete certain amount of hours per participant in soft and hard skills training, and you just had like a kind of predetermined path. But with this new challenge, we really, and understanding the uncertainty, we really want to go out and innovate in the intervention, and kind of give the service providers and the intermediary in this case the opportunity to come back to us with new options to really try to insert people in the labor market. So I think it's risk and innovation. Those two things have been really on the radar of our technical team to really think about it and see how the flexibility that the model gives in those two areas can be a potential for us to really contribute to employment for vulnerable populations in such a time of crisis.
Great, thank you, Laura. And before I go to Manuela, this week we're also going to have a visual note taker, Riley, and we'll be flashing the screen periodically here. Riley, maybe could you quickly just show your screen kind of to show where we're at and kind of how we evolve.
My screen?
Riley, so we have a visual note taker.
Oh, okay.
Which is a word I just recently learned.
Okay. Oh, cool. Alrighty.
So Manuela, so Corporacion Inversor, you guys were the GP of the first impact investment fund in Colombia. Now you're the financial intermediary of both the first SIB in Colombia and now the second one in Cali. It would be great to hear a little bit about where you guys at with the Cali SIB and really, how are you managing this? You know, what are the key pain points, and what are some of the ways you're going about, I guess, adapting to this context? And then I'm sure when you were structuring, you know, this impact bond, you couldn't, you may have built in certain assumptions for downturns in the economy, but nothing like this. Talk to us a little bit about that project and where you're at, maybe the discussions with the municipality.
Okay, thank you, Zach, and thank you, Laura, for the introduction. So as you just mentioned, Inversor was the GP of the first SIB, and we are now the intermediary of the second SIB. The second SIB, which is currently under implementation, has been affected by the pandemic in several ways. This is to be expected, taking into account that it is an employment SIB, and as economic activity in diverse sectors around the country has decreased significantly, and I think unemployment rate projections are reaching up to 25%, when in 2019, the year in which the SIB was launched, the unemployment rate was at around 9%. So in order to adapt and to mitigate some of the adverse effects that this has on placing vulnerable individuals in jobs and seeking a retention of 6 months, the SIB has taken action in two main ways. I think it's important to keep in mind that both outcome funders and investors have the well-being of participants whose vulnerability increases even further, I mean, at this time, as a top priority. And also that we've maintained the result-based payment essence of the outcomes contract. So the two ways that action is being taken is first, seeking some extra flexibility on some of the technical design characteristics that were originally in the contract, and adjusting payment timeframes. So timeframes have been held back because of what the challenges represent in terms of achieving results, and also because the government is dedicated to ensuring the health and the well-being of its citizens, so they are focused on dealing with the emergency. Results for the last couple of months, I mean, March, April, June, they were significantly slower than expected in the initial projections. Just for employment, our weekly job placements decreased by around 93%. And the participants that had already been placed in unemployment and that then lost their job increased on a weekly basis by 8%. So this is just kind of to give you a sense of the magnitude of the impact. In terms of the flexibility that we are seeking in the design, several proposals are being evaluated by the outcomes funders with the intention of adapting both the intervention and some specific requirements of the jobs themselves. So for example, types of contracts, the possibility of recognizing participants that have switched to several jobs within certain amount of times between the labor contracts. And we are also considering proportional payments for participants that were employed for at least half of the time required for a specific metric. So for example, in the case of the 3-month retention metric, this would be a month and a half. And for the case of the 6-month retention metric, this would be 3 months. So the proposal is basically, for example, if a person lasted 75% of the time for a specific metric, this would represent 75% of the payment for that specific person in that metric. These are some of the proposals that are being evaluated. And the second way that
contract amendments.
Sorry?
And are these proposals requiring a contract amendment with the outcome funders?
Yes. These proposals, if they were to be accepted, would require changes in the initial contract. The second way in which we are seeking action or taking action is making adjustments in the implementation planned by the service provider. So these are quicker adjustments. They don't represent or require changes in the original outcomes contract, but they do change the initial operational plans that were made, and this translates into different strategies for each metric. So in the case of employment, for example, service providers are reaching out to employers in economic sectors that have a demand at the moment or that have the possibility for remote work, such as opportunities in general services or call centers that are operating remotely. We have identified that in some cases, this places the SIP participants and their families at a greater health risk. So service providers have developed a digital strategy through their social media platforms to inform these individuals on accurate prevention measures and just overall reliable information on the pandemic and the virus itself. One of the main challenges, I think, for this employment SIB is service providers have identified that as employers are raising the bar in terms of the minimum required experience and training, the market has also become flooded, obviously because the unemployment rate has increased in the magnitude that it has. The market has been flooded with individuals that may have more experience than our SIP participants. So service providers are reporting that positions that didn't necessarily require experience are now seeking candidates that have at least 2 years of formal experience. This is a particular challenge because our participants and the population in their communities, which is vulnerable population, 60% of the people that we have employed come either from the informal economy, which means they don't necessarily have 2 years of formal experience, or this would be their first employment opportunity. So I think this has been a greatest challenge. The service providers are also implementing other support strategies, such as transport and nutrition aid packages, the latter specifically for participants that have had their contracts suspended temporarily. And they have also been opening additional psychosocial support lines for all participants. Those are kind of the overall challenges that we've.
So a few quick follow-up questions, and I want to also get to the others, but you make a few questions here. So you talked a little bit about both in terms of extending the time frame of the payments. You talked a little bit about making adjustments to the service, including what sounds like you're kind of adapting and maybe adding additional services. What does that look like? I mean, you guys are kind of managing investment funds of several parties. I mean, what does that look from an investment? I mean, it wouldn't extend the time frame impact your return because it ties up capital, and wouldn't adding these services increase the overall funding requirement? I mean, what's that been, and kind of how have those discussions been?
Okay, well, first I think that it's really important to keep in mind that the type of investors that we have. So our investors are also prioritizing at this moment, and because of the situation that we are in, the well-being of participants. They all come from the social sector, and I think one of the main things that they expect out of this SIB is to learn how the vehicle works, to learn how a SIB works, and then to be able to replicate this vehicle later on, apart from obviously a financial return. So I think that they're thinking about different kind of components and different returns, not only the financial return. The time frames of the payments, we have had to make several adjustments. So in order to mitigate the fact that we are actually going to be getting outcomes payments later than initially planned, we've had to restructure the timing of the capital calls that were initially planned, and we've also worked with service providers and had an entire journey, I guess, of financial performance management in order to ensure that we had the necessary resources to continue operating, but then also making sure that we could push back payments that could be pushed back. So
what
for
do you mean
example,
by financial performance management?
Okay, so we work with each service provider in order to kind of define or help them improve their cost structure. So what we've done, for example, in the last month, is take upcoming payments for the service provider and divided them, for example, into smaller payments. So instead of having one big payment that we would be doing in the next couple of weeks, we're giving them smaller payments over a period of time, ensuring that they have enough cash flow to operate, but also ensuring that the project doesn't have to maybe make payments that aren't urgently needed at the moment and that can be made a little bit later on.
And I think we'll definitely have some follow-up questions for the Colombian. It sounds like you guys are doing some very interesting adaptations, and great to see. And we'll want to definitely follow closely how both your current projects and implementation, but also how you may be able to use this model for response and what that means. But I want to just quickly now move to Maha from BNP Paribas. Maha, you work at a French bank. You have a portfolio of impact bonds. I think both in Europe, I think at least one in the United States. And in this portfolio, you have projects that are at very different stages of implementation. Some that are just kicking off, some that are about to wind down. And really curious to hear a little bit about how you guys are seeing this. What are some of the key challenges you're seeing? Some of the kind of emerging practices or solutions you're either working through or have found. I think it'd be quite interesting, and also any reflections from Colombia. Feel free to jump in.
Okay. Hi, everybody. Very happy to be here and to discuss these topics. Yes, indeed. It's been this crisis have put all the SIBs that we are working on at some point in difficulty, whatever their stage of maturity. However, it's true that there are some things that are emerging. In Europe, we are more discussing on how we could adapt those contracts. Whereas, for example, in the two SIBs that we have in the US, it's more like been kind of switched to a fee-for-service kind of contracts, where one is still under discussion, but there's another one for which the program needed was almost finished. I think 5 months were still needed, and the government just decided to pay off all the investors without the premium. So all the capital was reimbursed on the basis that the program was delivered. However, we wouldn't necessarily measure all the impacts, and therefore there were being no premium. So this is one way of doing it, to pay for service. In Europe, there's one contract that was just beginning before COVID in Belgium, and therefore we obtained from the cabinet that they would pay for a moratorium of 2 months, meaning that it's like the project had never begun actually, and would begin and is beginning at the end of the lockdown mid of May. So it's like a way of doing, erase and restart. So it's one way that we found that we could do. And then it depends actually on all the others. It depends on the topic, if it's employment, if it's housing, if it's education. For example, education is a hard one because, there's a scholar year. So, for example, we have one SIB on the scholar where only half of the intervention, because half the year in France, the year is from September to July. So the intervention was built up from actually September to February, March, but then the whole of the ending year cannot be, the intervention can not take place. So it's not possible to just, extend the program because this cohort has already started. And one of the thing we are thinking about, but it's not decided yet, is whether we are trying to underweight those two, the cohort, the COVID affected cohort, to underweight them in the whole KPI and reimbursement process. So to take into account the fact that they had only half of the intervention, so probably the impacts that are expected from these cohorts are not going to be achieved as if the program has been done completely. So this is one way of thinking about it. Then I think that probably what we're thinking ahead, what we could do is, in some contract, we already had this state of mind because we had shut down costs that were already put into the contracts. It was not because of COVID, but it was in the case that the state would not take up the program if it was a success, because this is an uncertainty that we still have on SIBS, is that there's no formal commitment of the government to say, okay, I will take over the program if it works. Unfortunately, we did not have, I don't know, maybe others have this firm commitment, but we don't have it in the SIBS we have. So we always feature out shutdown costs that are included in the program, and therefore which can say that during 6 months the program is still paid, but it's to shut down and maybe to not fire, yeah, to shut down to end the premises, to end the employment contract in a progressive way. So shutdown costs. And there's also one contract where we had the idea of putting a hazard envelope, which could be triggered in cases hazard. So it's not predictable cases. And it's maybe something that we will systematize in other contracts. Seeing that what is happening today with this crisis. So this is a way that can help in the future to still have SIBS, but having to take into account eventual hazardous events. I think you have a question.
What do you mean by a hazard envelope?
It's a hazard envelope. It means that there's a budget, a hazard budget, which is included in the contract and could be triggered. It means that in their budget, the state has it in the budget, the investor has it in budget, and it's an envelope which can be draw down if there's a hazardous situation. So it's forfaitary. It's around, I don't know, 150K, something like that, and it can be drawn down. So the investors have it in their global authorization when they go into committee. It was, and also the state has it into its budget. So it's budgetized, but it's drawn down only in case of a hazard. So it's interesting in this in this period to have this. And also something that is helping us today is the great flexibility that we have in the governance of our contracts. It's something that we put in place from the very beginning, which is the way that the governance of the SIB is able to change the program if there's something that is not working as we wanted or as we planned, and at the demand of the service provider, he can change the intervention of the program. So maybe here it's more digital, or it can be changing the whole model of intervention, and it gives this flexibility to adapt and adjust the timelines, the KPIs, and the intervention model of the contract. So it's I think this is something that we will keep also in the future, because it's very helpful today to have this. I can't hear you.
Sorry, these adaptations that you guys been developing, have the investors been really driving this as part of a conversation with your counterparts? I guess it sounds like most of the SIBs you've been working on are with government. I mean, or has the government been essentially providing, saying this is what we're going to do, and take it or leave it? I mean, what has been that?
No, we have discussed it. We as a structure, we've been structuring also those contracts. So we have asked the government to discuss. So the government, for example, in France, has sent an email to all the SIB service providers, telling them, okay, we know there's a problem. Please let us know what are your difficulties today, and so that we could organize an extraordinary committee, governance committee, to discuss how and what we could put in place so that the burden of this crisis is the less for everyone, and is specifically for the beneficiaries. Because as I was telling you in the previous discussion that we had, the beneficiaries as the core of the contracts. It's put in hard in all our contracts that everything should be done at the best interest of the beneficiary. It's written in the contract, so everyone is accepting this. So this is the way that we are dealing with the government. It's with a discussion. It's a discussion for the time being. Nothing was imposed.
So I want to maybe tease that out a little bit, because I think maybe people may have missed that point, which is, I think, something interesting. And so I think when we, I think maybe had kind of gone back and forth over email, I think probably in April, it sounded like you were working through a whole bunch of different challenging scenarios, as the investor, of kind of, do you enact force majeure? Do you cancel the contract? Do you renegotiate? Do you keep doing services and perhaps, lose resources? And obviously, the big concern sounded like, for you was, to make sure that when services can be can keep being delivered, they need to keep being delivered. But from an outsider looking in, people would think that as an investor, that would be an inherent conflict with some of your other core mandates. Talk to us a little bit more about what you just said around, why would an investor have to prioritize or want to prioritize, particularly kind of a more commercial bank like BNP Paribas, that the services keep going if that may impact your financial return?
Because it's the purpose for what one of the purpose we're doing it. It's obvious that it's not with SIBS that BNP Paribas makes its turnover, or it's not with SIBS that BNP Paribas lives, I would say. So it's true that when we go into those contracts, it is from an impact investing point of view. It's clearly not a pure economic investment. It's an interesting investment because it's a way of shifting from pure charity to an investment, and saying that, okay, we can consider a social program as an investment, and it's even sound to consider it as investment because it has a value, a real value. However, it's not, we don't do it because it's a super profitable investment. So I think that all the investors that go into a social impact bond, they go for it because of the innovation, and they go for it for also the beneficiaries and the impact and the social impact it has. And this is the real gain from a social impact bond from an investor's point of view. Then on the other hand, of course, the purpose is not just to find any solution that would, puts our investment at risk, but it's also to find the best solution that will at the top benefit the beneficiaries, and then be a fair adjustment between all the parties, so that the service provider puts all the possible means to address the fact and to have proposals, to say, okay, we cannot deliver how we wanted to deliver, but we put in place, we are imagining other ways of doing it, of the other intervention processes. So puts puts its guts in it, and then that the investors are willing also to say, okay, we are willing to make an effort financially because there is a higher stake in the balance, and because we want this program to be completed, and from the state perspective also to be not to be very so saying, no, this is what I wanted to pay, not more, not less, and having a fair solution that might impact all the stakeholders, but at least we are still having this alignment of interests. I think that what is really important is to keep the alignment of interests, and therefore everyone has to compromise. I think there are questions in the chat, but I cannot speak and read them at the same time, so if anyone can help me.
Well, I think what we'll do, well, maybe actually we have here a question from Tsitsi, and maybe just to keep on the investment side. Tsitsi, you have a question for Maha, maybe you can jump in, and then we'll move to our our guest from Village Enterprise. So
cool. Yeah, it's just a short question, maybe better answered offline in the chat. But I was just interested in which part of BNPP is making the investment, because it's of course a massive organization. I'm just wondering whether you had a specific vehicle or a specific entity that is doing these types of investments.
Okay, so from the structuring side, the intermediate is done in my team, in the CSR group CSR team, and then the investment side is done on the assets of the bank. So for own account, so it's the capital of the bank itself. From its own, I don't know how you say it, compte propre. Its funds, its own funds. And very recently, in the beginning of the year, actually, we launched a vehicle with the EIF, European Investment Fund, where BNP Paribas Group and the EIF both put money into this fund, which is called BNP Paribas Social Impact Bonds, European Social Impact Bonds Fund, which is a vehicle to invest in SIBs that are in the European Union. So it's a vehicle. So for all the SIBs that are in the European Union, this will now be the vehicle for the investments. And for all the other SIBs that are not in the European Union, it's going to be the same process as before this fund with the own account of the bank. Sorry, I don't know how to say it. But,
yeah, that's clear.
Okay.
Thank you.
You're welcome.
So we'll have more questions, I think, as we go through, but I also want to give a chance for Village Enterprise. And so maybe before we go to Village Enterprise, Riley, you want to maybe just quickly flash your screen so we can see the progression of the visual.
1 second.
Great. Well, thanks, Riley. So my next question, I guess we'll go to the Village Enterprise and maybe to you, Taddeo. You guys are implementing, a very interesting impact bond. It's I guess it's modeled after the CGAT BRAC, poverty graduation model. It's a entrepreneurship oriented model that also relies heavily on, working in rural areas, one-on-one mentoring in sessions, which kind of really requires a very close working relationship with service delivery, the type of measurements you're using, where you're having to collect household level consumption and asset data, information also requires a lot of in-person presence, at least as designed. Would be great to really hear about what is this very interesting project you guys have, but also hear from you a little bit about how is this pandemic impacting the bond itself, and what are some of the key issues that you guys are working through?
Yeah, so hello everybody. It's really good to be here and just getting to hear updates from the other organizations on how they are handling COVID SIBs and DIBs in this era of COVID-19. So as Zach has mentioned, we work for Village Enterprise, and we implement an ultra-poor graduation model. And Zach has outlined some of the things we do. So what we do is we work with people who are living in extreme poverty. Primarily, we are working in rural Kenya and rural Uganda. And what we do is we provide them a set of interventions. So we have them in training, business training, financial literacy training. We also give them seed capital grants. We also have them come create savings groups as well. And then for what we call our secret sauce is usually what is something called mentoring. And as Zach mentioned, that's what we really think is moves the needle in terms of impact and sustainability, in terms of making sure that once they start their enterprises, they really have the needed support, and they feel like they're able to manage all through these challenges. So in terms of COVID-19, it's been really quite an interesting thing, both for from the perspective of what our beneficiaries, we call them business owners. So from the perspective of business owners and also from village enterprise. So here in rural Kenya, rural Uganda, the number of COVID cases have not been very high, but the governments have, they've put in place measures that, to make sure to counter the spread and all that. But it's really been, it has really had a devastating impact on our, on the, the most poor, the vulnerable, in terms of like economic shocks. I think, Zach, as you mentioned earlier, this is not only a health shock, it's also an economic shock, and more so for people who are living in extreme poverty. So the restrictions, have ranged in terms of transport restrictions, in terms of even border, moving from one county to another county, from one town to another town. People are not able to use public transport, and a lot of our business owners living in extreme poverty obviously rely on public transport. So that's been, in Uganda, it's actually for a long time had been restricted completely. In Kenya, it's been very expensive because they've reduced the people who are allowed to be in a particular vehicle at a time. There's also been market closures. A lot of our business owners engage in businesses in small open air markets. That's been because of the crowding. A lot of them have been closed. There's also been curfew enforcement. So it's really been a lot of negative impact in terms of the ability to operate businesses. And then the other thing, which is a major component of our program, is savings groups. So there's also a restriction of the number of people who can meet at a particular time together. So normally our savings group is about 30 people, and the government is really reluctant in terms of even allowing more than 10 people to meet at the same time. So for our savings group, that being a safety net for our beneficiaries, that's been also a challenge. So really, we've seen all these different effects that really hampering the ability of business owners either to to generate an income or to even use their safety nets to be able to in these times of this pandemic. For us as a as a team, it's, as Zach, you mentioned, for us, we do mostly in-person mentoring. We go visit the business groups, we visit the savings groups in person, and really provide that sort of support, the needed support to make sure that they're really getting, they're able to flourish in these businesses, or even to have their savings groups to continue having more savings and also borrowing as well. So that's been really nearly impossible for us to do for now. So what we've done is we pivoted and started doing what we call remote mentoring. So we're reaching out to our business mentors, talking to them over the phone, sending them text messages. We are reaching through the, for those who don't have phones, we reach them through the leaders of the savings groups. Just really making sure that we're getting that connection. The other thing is we've done, we're also doing what we call market shocks surveys, trying to understand like the impact of this and how we can be able to do that. So because of that, we've seen the challenges they're having, and we've come up with a new measure. So where we've tried to help them transition to new businesses that do not require maybe like the travel, moving to a market to be able to sell, maybe even just selling at a local market, trying to also figure out innovative ways of them meeting in smaller groups so that they're able to do savings, and then just also trying to also connect with other like suppliers and helping them being able to procure that supply because of the supply chain disruption, so that they can get these inputs to invest in their businesses and help them at least for the businesses to continue. So those are some of the changes that we've done so far, and trying to still iterate on a daily basis as we see how the situation is evolving.
And how hard has it really been to do that? Because I imagine, if you're trying to pivot to new industries and kind of new markets and value chains, as well as provide new services, it's got to be it's tough in any situation. But I imagine in some of the where some of the beneficiaries are, virtual is going to meet reality in that they don't have access to maybe cell phones, but maybe probably not internet and other kind of IT solutions to do this. I mean, how limiting is it?
Yeah, so what we try to think about is just opportunities that would be, localized opportunities. So we're not we're not coming up like, all of these box like technology and ideas, but thinking about like if some of them were engaged like in tailoring business. They were making clothes, maybe making like school uniforms for kids. Schools are already closed, so you can't do that anymore. But can you we've seen people starting to make like face masks. Like right now, one of the requirements of the government is you cannot step out to the house without a face mask. So it's a lot of demand for that, and using for them, that's been a good opportunity because people can't afford the disposable masks. So you have to having a cloth mask is a way to go for people who are living in and probably so environmentally safe for that as well. And also we also work in rural East Africa, and fortunately for us, it's been the rainy season. So having some people, a number of them have also moved. They were doing service industries, like the eateries, the small restaurants have been closed down because of all the social distancing. So some of them have started, gone to lease land or even using family land to engage in agricultural activities for now. So, and just so try to think about those ideas, and others doing the same business as they were doing, but just moving around like from one household or just within the same village instead of traveling far to a wholesale market or a bigger market. So just trying to come up with these ideas. But you say sometimes it's not very easy, especially because of capital constraints. So that's trying to think about what are the things that we can be able to do to support them. I mean, one idea we've thought about is coming up with a stimulus grant, but that's something, it's under discussion. It has an impact on the type of payment. I think Celeste may be able to provide more details about that. But yeah, we're still trying to come up with some solutions. But for now, what we do is, we make do with what we have. And also for savings group, being a safety net where they can go either draw down their savings or go borrow from the savings group and use that money to either start a new business or to kind of pivot to something, to a new strategy for them.
So I want to quickly just maybe pass on to your colleague Celeste. Celeste, you're the type of organizations or kind of enterprises you're dealing with. These are sounds like very, very or highly informal enterprises. Essentially, the poverty graduation aspires to improve income, but you're not necessarily going to be auditing last year's tax statements. So from the way you're going to be measuring this, it sounds like you're going to be doing very much in-person surveys of consumption, household consumption and assets, which is very detailed, time-consuming, and requires field work. How is that impacting the project, and maybe particularly with a lens on the outcomes contract itself? We have I'd love to hear kind of how it's impacting, but also what have the discussions so far been like with your outcome funders and investors? Has it been a free pass? I know you have two people from USAID and somebody from Radana or somebody from DFID on the phone. So feel free to also, if they're being too tough, you can call them out. Don't be shy.
Sounds good. Thanks, Zachary. Yeah, so our development impact bond, it very much rewards impact at the household level on income. So in total, we have about $4.2 million available is outcome funding in the contract, and 2/3 of that is outcome funding that is where we're paid $1 by the investors for every $1 in lifetime impact generated as a result of our program. And so that impact is measured via an RCT. And so our whole DIB project has 7 cohorts, and the RCT is conducted in 2 waves following implementation. And so the first wave of the RCT was scheduled to take place in April 2020, following completion of our work with the first 4 cohorts. And then the second wave of the evaluation is scheduled to take place in April 2021, following completion of work with the last 3 cohorts. Now, of course, April 2020 is when the pandemic restrictions were in full effect in both Uganda and Kenya. And so our evaluation, the data collection for our evaluation could not take place at that time. We have, at this point in time, we are still considering the evaluation, that wave of the evaluation, to be postponed. with plans to go back and collect the data as soon as it is possible. However, we have had to set sort of an end time on the data collection, where we've agreed that if we cannot start the data collection by the beginning of October, that we will have to cancel the midline round of evaluation and start to look towards Plan B. What the group is leaning towards is probably some sort of a scenario where we would have one larger combined end line for all 7 cohorts in 2021 in that case. In terms of the contract, the contract does account for late payment, and it accounts for late evaluation and delayed evaluation and late payment. So there's not really any updates that we need to make to the contract when it comes to dealing with the effects of having an evaluation at a later date or having payment at a later date because the evaluation has happened at a later date. However, there are some technical considerations that may require adjustment to the contract. In particular, we are revisiting our assumptions that were put in place for calculating lifetime impact. And we're questioning if those initial assumptions are still true and /or relevant. And depending on where we land with the discussions, we may end up adjusting the formula that is used to calculate lifetime impact if we decide that we do need to update some of our assumptions. I can move and also talk a little bit about investors. For this development impact bond, Village Enterprise has contracted directly with investors. And so that means that when that we lead in discussions with investors. In our conversations with investors, there does seem to be some interest in providing funds that would allow their investments to be protected. So essentially providing funds that would allow for impacts or outcomes to for maximization of possible outcomes among the participants. And so essentially what this would mean is providing support that would allow us to either adapt to continue to be able to deliver the services that we already deliver in light of the effects of the pandemic, or to offer new services that are needed by the participants as a result of the pandemic. On the surface level, this really, as you think about how a DIB or a SIB should work, this sounds really fantastic, right? Where the costs of financing innovation and additional interventions needed because of this pandemic would be incurred by the investors to the benefit of the beneficiaries. And intuitively also, it logically makes sense, right, that you might fund additional activities and that would lead to higher outcomes. However, the calculation of lifetime impact and thus also our payment in part is a function of the lapse time between when treatment happens and when evaluation happens. So something that we're trying to reconcile with, or that we've had discussions about reconciling with this DIB, is that in particular, if we were to go back and offer certain additional treatments to cohorts that have already graduated, that would shorten the time, that would effectively shorten the time between treatment and evaluation and would actually serve to penalize us and the investors. So, I mean, overall, the entire group is interested in maintaining the outcomes-based nature of our contract. However, we certainly have a variety of tough questions to work through, both in terms of addressing some assumptions that may no longer hold, and then these larger questions around, is it better to maintain the original intentions of the contract or to prioritize the new needs that are coming up for the beneficiaries? And so a variety of options have been put on the table, including, you know, in a last resort, switching to an input-based contract. And I guess at this stage, we don't know for sure which option will be the one that we end up having to use in the end.
So give us some insights, and I know it's I'm putting you on the spot here, and happy to put them on the spot if you prefer, but kind of insights into some of these conversations with the outcome funders, and particularly given that they're here with us. I mean, what have been? I mean, it's you're definitely facing challenges, and I mean, have there been any really sticky issues that, you know, in these conversations where there's a divergence of opinion, and, you know, is it a free pass, or are they being very, very tough and saying you committed results, you have to do it? I mean, what's that been like?
Sure, I can touch on 2 examples. So the first one is this, these discussions around whether or not we, given the huge needs, like new needs that are arising in, you know, rural sub-Saharan East Africa right now because of the pandemic, this conversation around should we make adjustments to our payment structure that that reduces the penalty that we would incur if we were to go and offer additional programming. And so one of the things that we proposed is perhaps we could adjust the price ratio so that we're paid slightly higher per outcome to help offset the penalty in the calculations. And so the sort of at the highest level, the competing the 2 different viewpoints going into the discussions are on one side, the viewpoint of, you know, this is a relatively small pilot DIB, and right now in the world we're being presented with this, you know, unprecedented shock that is really introducing new need. And so if at any time you should be able to, you know, adjust an outcomes-based contract, it should be now. And if you can't even make those adjustments based on changing circumstances for a pilot DIB, what does that say about what sort of precedent does that set for the success of other DIBs? And then the competing thought is, you know, inherently to safeguard the efficiency of the use of outcomes funding, contracts should be inflexible. And, you know, if we set the precedent now for changing the contracts, you know, what does that mean for ensuring the integrity of future impact bonds? And so the circling back to the price, that one was a pretty hard no on making any sort of price adjustments. And in particular, the sort of the smaller point on the specific point on that one was that there was a really strong belief that the price was set accurately, and if the ratio was changed, it would be setting a precedent for overpaying for outcomes.
Hey, you know, I'd like to maybe draw in, you know, given that we have USAID and DFID on the call, maybe if there's anybody from USAID or DFID, would be curious kind of any reflections on your end, you know, on this process, in, you know, these types of contracts, you know, with this experience. And, you know, feel free to, you know, either DFID or USAID jump in. I think it'd be great to get any insights from you guys as well, from a donor perspective on kind of how you're thinking through this.
Hi, Zach, this is Radana. Hi, so I guess I'm the only person from DFID on the line possibly right now. And thanks very much to Celeste and Taddeo and Zach for the presentation today, helping us delve a little deeper into some of these issues. I think Celeste summarized pretty well. As a donor, I think one of the things that would be really difficult for us to do is changing the value of the entire contract, right? That you know, even as a large bilateral donor, very much right now the value of our contribution to the impact bond is set. However, within that, we've already had several conversations around, well, what can we do? Is it, you know, do we look at paying more per unit of impact measured, or do we relax some of the conditions on how exactly we measure impact and outcomes delivered? I think so far as a donor group, we're pretty open to that. I think there's a lot of sort of strong value placed on continuing this as far as we can as an outcomes-based contract, and continue, I think one of the group refers to the kind of the spirit of outcomes-based contracting, right? And trying to maintain that as far as possible, and see how we can collectively use that to our benefit, right? And enable village enterprise to continue working flexibly, to continuing focusing on the final impact that we're paying for, rather than necessarily right away launching into some exercise to trying and figuring out how it is that we would pay for inputs. But I would stress that, you know, that flexibility on the donor side, it's been important, and it's important to some extent start with all options on the table. This is all relatively recent, but I think over the coming weeks and months, we will start to have to, as a group, narrow down the options in terms of what is what's most relevant and what's most agreeable to us all as well. Would we have, I think Jane is asking, so I'll just answer right away if that's all right. Would we have more flexibility to adjust the total amount if the donor funding was through an outcome fund? To some extent, I think depending on the design of the outcome fund itself, and to what extent there are any kind of, there's any unearmarked funding that, you know, it was interesting hearing Maha reflect on the sort of possibility of a crisis fund. Could we imagine that in future outcomes funds include some sort of a pot that's sort of used for unexpected scenarios of force majeure? Quite possibly. Right now, I think even the outcome fund type transactions that we have been involved in the design of haven't actually considered that. Still, funding is pretty set in terms of a total pot. But Jane, it's a really good question, and I think worth considering going forward as well, on allowing that flexibility, and again allowing the continuation of on an outcomes basis for us as long as we can.
Thanks, Verdana. And anything to add from USAID side, and if not, let's open this up to all of you for questions. If you have questions, you know, please, and don't be shy, or we'll call on you. Put your questions into the chat, and that way we can bring them up. And Riley, maybe you want to, while we wait for questions, you know, feel free to show the visual notes so far.
And this is Amy from USAID. I'll just quickly add.
Great. Thanks, Amy.
We're, you know, similarly kind of working through these conversations, open to flexibility. Our award mechanism is a little bit unique on this, where our direct grant is to Instiglio as the project manager, and we have the award is directly to them. So we're kind of working through the conversations with them and the rest of the working group to think about how we can have flexibility on our award. So it's kind of an ongoing conversation. Like Verdana said, we're, you know, going to have to make an ultimate decision, but that's kind of where we're at this point.
Thanks, Amy. Great. So, you know, please, if you have questions, I would encourage you to put them into the chat. I think we have a question earlier here from from Ellen. Ellen from Palladium, who spoke last week. Ellen, please, I think you had both a question and maybe some reflections. Feel free to jump in.
Yes, hi. Should I turn on the video or leave it off?
Yeah, please turn the video. I think interaction is good.
Okay. Hi. Can you hear me? Yeah, so my comment or question for the group was about how the metrics and how the outcomes are defined. I've, again, had this question since before COVID, which is a lot of the outcomes are defined in absolute terms, whether it be an economic project about unemployment or a health project about lives saved or malnutrition averted or things like that. So what I've been wondering is the possibility of having relative impacts rather than absolute impacts, because these are all social sector projects, all working on different social topics which are very thorny and impacted by so many different things that are always going to be outside of the control of our impact bonds. And so we'll never be able to account for all of those in terms of measuring, especially if we're focused on absolute outcomes. And so, if you can have relative outcomes, meaning, what is the employment in the areas where the impact bond is working as compared to other similar areas, or what is the reduction in mortality or malnutrition rates or whatever, or the education outcomes compared to a comparable population, that would be one way to better control for any shocks. At this time we're talking about COVID, which is a global shock. And that's why we're talking about it. But at the same time, there's often shocks in one of the countries where the impact bond will be happening, or not even in the whole country, just in one sector that might affect it. For example, I remember in a conversation about a nutrition impact bond where you're focused on sort of health interventions, but there's 100 things outside of the health sector that could impact malnutrition that we can't control. And so I'm just wondering about if you have these if you look at the impact your bond is having relative to a control population, it would be harder to do and more expensive, but it would control for all sorts of shocks, and you would really be getting counterfactual of how much better are things than they would have been without this impact bond, despite COVID or despite any other shocks that we didn't abate.
And anyone from the panel want to take that?
I can jump in on that because we are using a randomized control trial to assess our impact on household income and release our outcomes payments. And I would say, I guess it's a little bit of a yes and no answer to the question, in that the benefit that we're seeing right now in using this approach where we're using an RCT is that it is not absolute, right? It is relative, and we have no reason to, or we have every reason to believe that when the evaluators are able to go back into the field and collect data, that the estimate will be a true estimate of impact at the time of, at that point in time, relative to the counterfactual situation. However, what we're also struggling with is that answering that question, it does turn into a slightly different evaluation question than before, because we're supposed to be repaid for an impact on lifetime income. What that in principle would mean is repayment for cumulative impact over the observation period, plus estimated sustainable impact. And so at the point, in normal circumstances, when there's no huge shock like this, you would we had built into our payment formula this assumption that impact measured at time S is a good proxy for the impact in any of the preceding months between the time of the intervention and time of evaluation, which is sort of a critical assumption that you need to be able to afford the evaluation for the project, right? Because it's already expensive enough to collect one round of data for a randomized control trial, and so now what we're confronting is the situation where when it will be time to collect data, yes, it will be a valid estimate of residual impact, but intuitively it's really hard to accept that that estimate would be an acceptable proxy for the level of impact that we would have had before the pandemic. So it's like sort of like pros and cons that we're seeing with this evaluation approach.
Sounds like you're talking about the timing of the shock vis-a-vis the timing of when things are measured.
Well, yes, exactly right. So, and that's exactly is that the sort of when the shock happened via the timeline for our DIB, it really affects the that one assumption, right, about the impact estimate being a valid estimate for like each of the preceding months as well. Versus, and so it calls into question, right, the robustness of this model, given that this type of shock.
Thanks. We have a question here from Khadija from SocGen. Khadija, do you want to maybe ask the question? I think it goes to Village Enterprise.
Yeah, hi. Can you hear me?
Yes.
All right, great. Thank you so much for this talk. It's just a very specific question with regards to the methodology that you're using for the quantification of your impacts. I was wondering, is income improvement one of the KPIs that would be triggering the outcome payments from the funder to the investor? And if so, which I think it is, how exactly are you measuring this? Are you using proxies? Given that the lack of data in the informal sector is a prevalent point in determining such factors. So if you could just elaborate that on a bit, that would be very helpful.
Yes, it is income, impacts on income that we're looking at, in particular household level income, and we're proxying that through consumption and expenditure. So we also, so essentially while we're proxying that through consumption and expenditure, our current formula also looks at change in asset stock over the observation period and uses that to predict future sustainability of the consumption and expenditure impacts. So it's those combined elements in our current payment formula that are used to predict total lifetime impact on income and calculate the payment.
Thanks. I want to tease out a comment from James from Ecoris. So James is saying, it's interesting to hear that prior to COVID, there was a sense that counterfactuals and was expensive and cumbersome, which they are, and at least in our experience, can be quite hard to communicate to certain types of stakeholders that may be less familiar with evaluations. But he said it's interesting to see how there could be benefit now for controlling for these types of shocks. James, do you want to elaborate and would love to maybe hear from some of our panelists, particularly those that may not be using counterfactuals within their bonds, and kind of what, any thoughts?
Thanks, Zach. No, you articulated it really well. It's just, I feel that this is an ongoing debate on the use of counterfactuals, and it does feel like this isn't the first webinar I've been on where someone made the point that was just made now of, well, I have an employment SIB, and actually I've got a comparison group, so I'm more comfortable that we're capturing the impact of COVID. But I also think Celeste's point is excellent, that, well, what you're now going to get is the added value we are achieving in a COVID world, but you're not capturing the added value we feel could have got otherwise. So I'm not sure if the debate has substantially changed. It's perhaps just got more complicated. But as you said, I'd be interested to hear what other people's views are on that.
Any thoughts from maybe from BNP or the Columbia team?
So this is always the question that we have when we start a SIB. I would say that we use comparable year to year statistical data anytime we can. Actually, this is the way we usually have the evaluation, is we try to get national benchmarks or a geographical benchmark on a similar population, and try to measure the differential that is obtained. So this would, when it's possible, minimize the impact of the COVID. On other cases where it's more national historical data, then it won't take into account this differentiation. Actually, it's true that the randomized control group will be the best way of looking at it, because you have the population that is ongoing the same situation as the persons that you are actually intervening on. But it's or otherwise another way of doing it, if you are advanced in the program, you could extrapolate some of the results that you had on the first cohorts on the last ones, and see the differential that you can observe. But then it's always criticizable. But I think we can only function in proxies and keep open-minded in this type of times.
Thanks, Maha. So we're running low on time. So I want to maybe ask a quick last round of questions to the panelists. Please be succinct in your answers so we can end on at 11 US time on the dot. So first question is, looking back on what you know now, what's one thing you would do differently in terms of the design? Second question is, all of you in some way are either have one or more projects on the kind of employment enterprise sector, a sector that's highly relevant in this moment. Do you see, does outcomes-based financing have a role in what will be the massive needs around recovery and later resilience? And maybe we can start with Columbia, please, real quick, and then we'll just go right to the panel and end.
I'll just go straight to the second question, Zach, for the sake of time. And in terms of, I think what we're doing now is really strengthening the collaboration. Now that we're in the structuring phase, is strengthening the collaboration between the public and the private sector to really contribute to what the effects in employment we're seeing, and the employment rates are rising. So I think that's one thing, the collaboration, and then the opportunity and the flexibility that these model is giving us to really contribute to mitigate those effects.
Right. Manuela, one thing you would do differently?
I'm actually new in the program, so I think if Daniel from Fundacion Corona wants to jump in, he might have a more clear answer, or maybe Manuela that has been in the program before.
Yeah, with respect to the first question, I would just say really, really quickly that I think that we've learned that in the technical design, you can't try too many things out at the same time. It's not necessarily a good thing to try to innovate or to test out many different things at the same time. And also, I would think that by putting too many different elements or details in the specifics of the intervention, or in our case, the types of contracts and that kind of thing, it may complicate the implementation in ways that are very difficult to foresee.
Maha, and any final kind of one thing you might do differently, and maybe to reframe the question for you, would you invest again?
Yes, we would invest again. And what I just talked about it. I mean, more hazard shutdown envelopes, something that takes into account what could happen, and keep this flexibility in the governance that can, make a swift flexibility within the program. I think this is the key.
Village Enterprise, final word to you guys.
I think what the number one thing that I would probably do differently is make sure that that a project is designed in such a way that you there's not like a 2-year lapse between the start of intervention and the first round of evaluation. For us, that really that length of time had to do with the population in each cohort and needing to wait until we were sufficiently powered for evaluation, and also needing to with what we're focusing on household level income, needing to wait a certain period of time as well. And I would just look to have different requirements for the project itself that sort of reduce those barriers and make it possible to have outcome evaluation earlier in the project life cycle. Great.
Well, I'd like to, maybe Riley, do you want to show your final notes, or Christina, do we have the final notes from Riley to share? I'd like to thank all of our panelists. You know, this was a fantastic discussion. I think quite interesting. I think we talked about, you know, some different elements than we did last week. And so hopefully this was a useful conversation for you guys and for the rest of everyone. Next week, we'll have a little bit of a different discussion looking at technology and evaluation and what all this means, and with ICSO and Grey Matters India. Thanks again to everyone, and you know, look forward to hopefully continue this discussion next week.
Thank you so much, Zach, for the invitation.
Thank you. Thank you very much to all.
Thank you.
Thanks, everyone.